Welcome back to the Explainer, everyone. Okay, so today we're breaking down a market that honestly looks less like your traditional financial chart and a whole lot more like some epic, high-stakes anime battle. We're talking vibrant comet colors and massive opposing forces just colliding on the screen. On one side, we've got domestic economic victories, and on the other, escalating global conflicts. It is an absolute clash of titans, and every single new data point right now is hitting like a critical strike on the battlefield. So let's get into it.
Here's our tournament bracket for today's Explainer. First up, the crypto market battlefield. 2. Macro clash, CPI versus oil. 3. Institutional reinforcements. 4. The regulatory power play. 5. The World Cup token arena. And finally, number 6. What is the next move?
All right, starting with part 1, the crypto market battlefield, a tense stalemate. So let's set the scene here. Right now, things are incredibly tense. We're stuck in this low-volume consolidation phase, which basically means neither the buyers nor the sellers have the conviction to launch a full-scale offensive. Bitcoin is hovering right around $62,767, and it's just fiercely trying to defend this critical support band between 58K and 63K. It did dip below 58,000 earlier before recovering, but man, this entire zone is under heavy siege from some major macro pressures. It feels like every time Bitcoin tries to break out, a new headline just pushes it right back into the trenches. Moving on to part 2, macro clash, CPI versus oil. And this right here perfectly illustrates that exact tug of war happening in the market. On the bullish side, we got a massive, massive surprise. The U.S. June Consumer Price Index data dropped, showing inflation cooling much faster than anyone expected, all the way down to 3.5%. That instantly sparked a much-needed relief rally. But on the bearish side, we're looking at escalating Middle East tensions creating a severe risk-off environment. So traders are just constantly oscillating back and forth, weighing the liquidity boost of cooling inflation against the really heavy headwind of rising global conflict. To understand what's actually driving those geopolitical fears, just look at this development. President Donald Trump announced that the U.S. will reinstate its maritime blockade of Iranian ships in the Strait of Hormuz. And he's demanding a 20% security fee on all other cargo. Overnight, U.S. forces conducted strikes on 140 Iranian targets. Now, treating this purely as a tactical shift on our financial board, this conflict is sending oil prices way up. And you might be wondering, why does that matter so much for crypto? Well, because rising oil threatens to completely undo the progress we just made on inflation. It could literally ruin the relief rally that CPI data just handed us. That brings us to part 3. Institutional reinforcements. Let's see how this builds, because right when the bulls looked completely pinned down by geopolitical stress, the heavy cavalry arrived to the tune of $282 million. No joke, that is the massive net inflow figure we just recorded for spot Bitcoin and Ethereum ETFs, right as all this market volatility was peaking. This sudden influx of capital is absolutely crucial for your portfolio's foundation. Think about it. This shift violently ends a grueling 8-week outflow streak where we literally watched $8.26 billion bleed out of the market. BlackRock's IBIT led the charge here, bringing in over $291 million on its own. So what does this actually mean? It entirely neutralizes that bearish narrative going around that traditional institutions were losing interest in crypto. Instead, we're getting a much cleaner demand signal. Traditional allocators are definitely stepping back into the fray, and if these inflows can just sustain themselves for a few more sessions, they provide a very solid concrete floor for prices going forward.
All right, part 4, the regulatory power play.
So beyond just surviving macro pressures, there's actually a massive legislative power play unfolding right now in the background. Enter the Clarity Act. This is a landmark bill designed to finally clearly define digital asset classifications and lay down a crystal-clear regulatory framework for stablecoins. And if this legislation advances smoothly, it acts as a major catalyst, specifically for altcoins like Solana, Cardano, and XRP. It's essentially the regulatory certainty that compliant DeFi projects have been waiting for to really expand. And the push to actually get this passed is a heavily coordinated maneuver. We're talking over 200 major institutions, including heavyweights like Coinbase and Andreessen Horowitz, who are intensely lobbying the Senate right now. President Trump is also actively pushing for its passage in honor of the late Senator Lindsey Graham, who is a really significant supporter of the bill. So looking at this purely from a market mechanics perspective, any meaningful update or progress from the Senate today could trigger an immediate outperformance in those altcoins compared to the broader market. Next up, part 5, World Cup token arena. While the majors are out there fighting the macro war, let's take a high-speed side quest into a super niche sector that's experiencing some explosive volatility right now. The crucial point here is understanding the incredibly fast life cycle of these fan tokens. First, you've got the hype. Tokens for teams like Spain and Argentina are just surging as the FIFA World Cup semifinals approach. Second, the squeeze. There's this unique initiative called Burn to Glory that's actively removing millions of tokens from circulation whenever these teams secure a victory. It's heavily squeezing the supply. But third, and most importantly, is the danger. Analysts are flashing major red warning signs for a massive sell the news drop-off hitting exactly on July 20th when the final concludes. So, if you're playing in this arena, you absolutely must have your exit strategy ready before that final whistle blows. And finally, part 6. What is the next move? The battlefield is set, the forces are fully engaged. But what exactly is the next move? Look at this timeline. Every single one of these upcoming dates acts as a critical strike on the board. We just absorbed the July 14th CPI data release, which gave the bulls an early advantage. But then on July 15th, the U.S. maritime blockade goes into full enforcement, and that's going to really test the bears' strength through rising oil prices. Then on July 17th, we've got the crucial Clarity Act hearing in the Senate. Moving to July 20th, that brings the World Cup final and that massive fan token sell-off risk we just talked about. And finally, the whole shebang culminates on July 30th with the Federal Reserve rate decision led by the new Fed chair, Kevin Warsh. That decision is going to be the ultimate liquidity trigger for the rest of the summer. So I want to leave you with this final thought to chew on as you track these fast-moving signals. If the military tensions in the Middle East escalate even further, will Bitcoin finally decouple and act as a safe haven digital gold? Or is it just going to fall in lockstep with high-risk assets like the Nasdaq? How that plays out is going to define the entire crypto meta for the rest of the year. Keep your eyes on the charts, and I will see you in the next explainer.